I remember at the time we invested in Ola, every single person came and asked me, like, what were you thinking? Right? Cab drivers are never going to adopt, mobile phones. What do you think a customer is going to open an app and wait for a cab to show up? Driver is going to, use this and all that. I mean, it was hard to foresee. By the way, when we invested in Ola, it was operated through a call center. We had seen the app, obviously, because we knew that that is getting launched, but largely it was all call center driven, right? And at that time, Uber was a tiny company in Silicon Valley that very few people had heard of.
Still, if you look at penetration of lending, insurance, wealth, all of this is minuscule or still tiny. In fact, we were doing a thesis discussion recently that what we used to invest 5 years ago is still relevant in financial services because you can cut the market in so many different ways. Each sliver is actually pretty large because of India's sheer size and scale.
Today we are, excited to talk to you because Matrix has raised $550 million fund, and that's huge. That's significant, and to me, this is also an endorsement of the Indian entrepreneur startup space, and of course, you guys, the way you've operated, invested in India. Tell me, what does it mean? And first of all, congratulations. And what does it mean, this $550 million fund?
So what stays the same is, I think, our focus on early stage investing will continue. So we will continue to do seed to Series B, entry checks of 1 million to 10 million. So that's one. Second is a big theme in our last set of funds was digitizing existing GDP. And I think that will continue. So for example, in auto, we invested in Ola Electric. That's a big theme overall electric, but it's basically playing to the current GDP, which is already flowing through that sort of sector. We've done a bunch of deals in agri-tech, in B2B, and consumer and commerce. That's basically all existing GDP getting digitized, right? We expect that a large part of the new fund will also be deployed investing behind that theme. Third, I think in the last fund we had actually really set ourselves a goal that we wanted to have a disproportionate focus on experienced founders. Fund 1, Fund 2, hote nahi the, right? The ecosystem itself was so raw and so nascent that we didn't really have as many founders who had kind of seen cycles. Today, 15 years into this journey, I think we have enough founders who have sort of been around the block a few times, made their mistakes, learned from the mistakes. We as investors have made mistakes and learned from those mistakes. And so I think our view is that there was a time where a very small part of the overall value creation in the version 1 or the first era of the internet, large companies, Ola, Swiggy, Urban Company, Zomato, all these were created by young, daring founders with maybe a year or two experience post-graduation, right? Today, if you see that, I think 30 to 40% of the overall large value creation is coming from founders who have either started up, sold their company and are now starting up again, or senior executives who have worked very closely with a successful founder, have understood the playbook and are saying, I want to do it myself. And so that's been a disproportionate focus for us. What changes is, I think, two things. One is, as the market has deepened, we believe, and now even public market sort of has validated that India can create $5 to $10 billion real valued, publicly listed companies, okay, which were sort of VC backed, right? Till 2 years ago, it was all up in the air. कि यार ये real value कितनी है इनकी, right? Private में कुछ भी value चल रहा है, but real value कितनी है? I think now between multiple companies that have listed, there's enough that okay, $5 to $10 billion companies are supported by public markets, even in the current market scenario. Okay. Now, as early investors, very often, we take all the risk, we do all the hard work, we get into the companies, and we were not able to participate in sort of rounds beyond, say, after 3-4 rounds of funding in a company, because it used to become a percentage of fund size. So there were, various constraints. And at some level, we weren't clear, like, how large do these companies actually become? I think today we have that data. And so we want to double down on winners in our portfolio and continue to defend ownership in those companies for longer. Because even, say, for example, a company is raising money at, 400-500 million valuation. If I can still see a clear 10x from there, right? It's silly of me to give up the right to continue to invest in those companies. And so with the larger fund, I don't think the number of investments that we will make will change. The number of investments will remain more or less similar. we did last fund, we did about 40, 45 investments. This fund, I think, will be broadly similar. Maybe it'll be 50, but I don't think the number will drastically change. What will change is we will invest more in the big winners and continue to defend our ownership for longer. So that's one big change. We will double down on new stuff which is happening in EV, semiconductors, AI, climate tech. These are big themes, and in some cases we've already made investments. Some announced like Ola Electric, but some not announced. Like we made 3 investments, I think, now already in generative AI. We've not sort of announced most of them, but that's another theme that we want to continue to invest behind.
Tarun, why don't you give me the names of the company in generative AI?
One is disclosed, which I think is Murph. The others, I don't think we have announced yet.
But
They're
I'm
still
very,
in closing also.
But very, this is very encouraging. And most importantly, I've not missed the word that you also used, semiconductors and AI, because, in India, as we grow, and you were talking about the growth in the digitization of the GDP, but overall, as GDP and economy has to grow, we need investments in these sectors. And what you're saying as Matrix, you're going to be making more of these investments, and also, backing the companies in, as they grow and as they scale.
Yes.
Yeah.
That's right.
Yeah.
Shradha, I will just add to your question on, what does this mean? I think it's a big sign of confidence on India. We want to thank our LPs as well on India, what we are doing, and our founders. Practically, are here because of that. So, we are depending on what they do. So, yeah, big thanks to them as well.
Rajat, you alluded to this. What has been the sentiment when you went to the market to raise, and this is a big fundraise that you've, that has happened. What has been the sentiment? What are the LPs saying? And what's the sentiment when it comes to India? And why I'm asking this, that just last week I was speaking to some of the very senior officials from Denmark, and they said, India has always been a big story, right? But kab hoga wo big story? When will that happen? Has always been a big numbers. Everything when it comes to India is big. But they're saying that, listen, now we've zeroed in that India is our number one priority market, right? Like when it comes to innovation and startups and all that. So just want to get a sense, what did you guys, what are the signals, sentiments that you picked up?
Also similar, overall, the environment is muted for sure, right? Versus what it was. And that's from an overall global perspective. But India is a shining light, and some of the stuff that Tarun was saying, that our GDP 3.5 trillion will go to 9-10 trillion in 5-7 years. Share of digital in that will become 15, 20, maybe 25%. So say 2 trillion from digital GDP is going to get created. We've always heard this rise of India's middle class story. That's actually happening, right? Today we have 1 in 4 households that are middle class or above. As the country gets richer, 1 in 2 will become, middle class, and that's when the incremental GDP happens, it all goes to consumption. Saving to utna hi hai. This middle class will consume 3.5-4 trillion of goods and services, and that's the power of the Indian market, right? Which is finally happening in our next 5-10 years. It has to happen. We've all seen the China comparisons. It may be time shifted, but it has to happen. Right?
Yeah.
All the building blocks have been put in place, whether it's digital private infrastructure, digital public infrastructure. Sorry.
Yeah.
The quality of founders that we spoke about earlier, that our Indian founders are actually at world class, right? In sector after sector, their ambition, drive, customer centricity, all of these are truly exciting. So, and then I would also add, governments played a role here. Governments played a very big enabling role. We saw that in electric. We saw that. We are seeing that now in semiconductors governments. Every week there is a new announcement that's coming through, which is actually very positive. Yeah. Our Prime Minister keeps talking about, Digital India. Finance Minister talks about tech aid. So it's all, it helps the global investor to think of India then in a more positive light.
Yeah. So what I'm hearing from you is that there is confidence, and things have more or less fallen in place.
Look, skepticism be here, right?
But I have to talk to you, and maybe that would be another conversation on the Indian middle class, because every 3 years when there is a downturn, or 4 years, kuch hota hai, so there's a huge question on Indian, how many people will consume. So that's, I think, one hour conversation.
Well,
But
see the data, the number of SUVs that get sold in India. Look at all the German car makers. They have had bumper years. We've never had that, but it's happening now in front of us. The Ola Electric itself, right? It's a premium bike. It's like highest incremental market share, and the pace at which that companies become large, we've not seen it in India.
Sorry, Shradha, I'll just add one thing specifically on the comment you made about this German or Denmark investor. You know, I was reading this quote and I can't remember who it was. I think it was Shradha Sharma who said this, and it has stayed with me, which is India has consistently disappointed both the optimist and the pessimist. Right? And I think there are people who, when they get disappointed, they probably were too optimistic about where things are at. At the same time, the pessimists will miss all the value creation that is going to happen in this country. As VCs, our job is to be future backwards. We're always living in the future. Yes, the past has had a bunch of learnings. Maybe we all overestimated the market a little bit. Maybe we got started too early. We put in a lot of capital. But see what's happened since 2016, right? Like the big enablers of where the country is today, between Geo, between the DPI that Rajat spoke about, all the digital public infra with UPI and Jandan and Ocean and now ONDC and everything else, GST. Like there's so many large enablers. And on those rails, the space at which the digitization is happening today, I think is a massive, massive change that has happened. So that's one. Second is, I think we all have to acknowledge that India today is the one bright spot, right? Our inflation is under control, our interest rates are under control, our growth is sort of back to where it was, post-COVID, COVID obviously took it, but post that, we've come back to that 777 kind of economy. And we have benefited, given the global geopolitical thing with China, absolutely, capital has basically flowed more towards India, right? So I think these are more macro changes that we are all benefiting.
Brings me to the question, what are some of the sectors that you are bullish about? Because in the last 10-12 years, kabhi marketplace sune, e-commerce sune, shared, bahut kuch sune, B2B, SaaS, enterprise. Now, what's the next big sectors or spaces?
So, Shradha, I think the core parts of where we invest will continue. As Tarun was saying, Fund 3 ka ek big theme that digitizing existing GDP, existing spends across sectors. That I think will still continue, and large chunk of where we invest will be still that, whether it's consumer brands, consumer internet, B2B commerce, digitizing supply chains, fintech. SaaS, actually, Fund 3, we haven't talked much about SaaS, but that was a big one for us in Fund 3, and it will continue driving that because, frankly, we have world-class product talent in India now. And again, these SaaS unicorns, etc., have shown up, so people have got confidence of how to build global SaaS companies out of India. So these, four spaces broadly will continue to do well. And then we'll add new stuff, and we've started doing already, whether it's AI, healthcare, semis we've spoken about, climate, crypto also. We actually made our first few investments in crypto and Web3 as well from this fund.
When did you do that? Recently?
In the last year or so.
Oh, that's a big thing, no? That's like, that stock market hota, then it would have gone up with you talking about this, because it's been so down, right? Like last 1 year.
I don't know if it was foresight or what. We actually stayed away from most of the crypto stuff when it was all going up into the right. And but in the recent past, we have. We are quite excited by some of these companies.
Okay. If I may ask, again, if you could elaborate or tell us, are you looking at, and then I'm saying semiconductor because you brought this up, and there's so much of focus from the government on semiconductor and chip designing and manufacturing. Are you going to be looking at hardware overall, investing in that space, because we've not seen a lot of it?
Yeah, so exactly where we'll end up investing, we're still in the middle of figuring that out, but we're not averse to hardware.
Okay.
And again, we've spoken about Ola Electric 2-3 times now. It's as hardcore hardware and factories, manufacturing as it gets. So we're not averse to it at all.
What does it mean, and how do you look at your orientations, your operation, and how do you conduct yourselves?
Maybe I'll take that one. So Shradha, I think the roots of the firm actually come from, Avnish was the founder of the firm. He was the founder of Bazi. He built a company in internet in India when nobody knew what was startup or what was internet, right? So I think that really sets the roots of the culture. Over time, a lot of us joined the team. Like I come from an entrepreneurial background, Vikram comes from the same background. Bunch of us, have sort of operating backgrounds before this. But I think it really changed when I think in about 2018, when we saw this shift happen, right? So if you go back just history of venture capital, right? In India, like I said, the first generation of all the large companies that we know today, Flipkart, Ola, etc. So all, people with very little experience post-graduation. They all were first-time founders. They all made, the first-time mistakes that, founders will make and learn from them and, have come out sort of stronger after that, right? And eventually created successful businesses. The experienced founders operate very, very differently. They have been around the block. They are more thoughtful about sort of the choices that they're making up front. They are focused much more on sort of GTM than product market fit. They are much more focused on capital efficiency on day one. It's not an afterthought. Business model and profitability is not an afterthought. The quality and the kind of team that they build. So there's a lot different about it, right? Those are the founders that we have actually now, and I'm not saying that will be the only value creation. It will end up being some version of 50-50, 60-40, who knows, right? But it will be distributed between that. But now those founders are also expecting a different level of engagement. They don't want to meet a junior person at a VC fund with 2 years experience and no understanding of that domain, right? Because they want the discussion to start at a different level of depth and nuance. And so I think as a VC, it is incumbent on us to sort of rebuild our teams basis what the market is seeking. And so today, I think, and I don't know if this data is accurate, but I think as a firm, we will have the highest operating experience across pretty much every sector that we are investing behind. So we are 5 or 6 large sectors are fintech, SaaS, B2B, B2C marketplaces, consumer and D2C brands, media, social gaming. Across every one of these sectors, we now have somebody with a decade of operating experience. And this some of it is just homegrown people that have gained more experience in Matrix, but most of them are actually people that have spent a decade operating in that domain. So they have the networks, they have the knowledge, they have the nuance, and so I think that's the other big change that we have made.
Rajat and Tarun, you spoke about this. Just if you could, for all of us, talk about the depth that you're seeing in the Indian market, and of course both of you lead it in different ways. That abhi IPO hua hai, matlab aur itne car purchase ho rahe hain, but there has been this question, right? Like how much of depth do we have, the consuming part to the investment, seeing that kind of scale? What do you have to say, and what would you like to tell entrepreneurs who are maybe building right now? And also, sorry, one question again I want to add there is fintech, right? When it comes to fintech, there are 2 points of view that, fintech mein ho gaya. You've seen so many pole positions, right? You've seen companies and all that. Ab bada banega ya nahi? And then there's the second time that fintech is just scratching the surface. Maybe if you could also talk about that space.
Yeah. No, so Shradha, I think if I understood your first question, it was basically around consumption and how large we expect this economy to become, right? And I think, see, the way we look at it, and I'll just maybe it's a quick math exercise that we can do together, right? So today, India's overall GDP is about 3.5 trillion. Okay, of that, if I take digital market cap, it's about 5 to 7%, right? Which is about 150-200 billion. If you take all listed and unlisted companies put together, we have about 150 to 200 billion dollars of digital market cap. Okay, इसमें Paytm, Ola, Zomato, Swiggy, सब कुछ आ गया, right? If I were to fast forward, say the next decade, and like I said, as investors, as in VCs, especially as early stage investors, we are always investing in today what we think will be bigger, big and large and material 5 to 10 years from today. So if I take a decade out view, say 2033. That 3.5 trillion is going to about 9 to 10 trillion. Okay. In that, our belief is the digital market cap is going to go from 5-7% up to 20%. Okay.
So China was say 40%, US was 30-40%. So this 15-20% is actually not
a conservative number, right? Okay. It's not outlandish. So mota 1.5 to 2 trillion of incremental digital market cap will get created in this country in the next 10 years. Now, some of it will go to the incumbents. So obviously the geos and, bunch of, current sort of large, business houses will also do digital. So some of that market cap will go to them. But I think there is a good 50 to 70% of that number, which will come to just startups, and again, the Paytms will become larger, the Olas will become larger, the off businesses of the world will become larger. But there will also be a lot of new companies that will basically participate in that value creation. India is a consumption economy. As GDP per capita goes up, discretionary spends actually increase non-linearly. So we do expect, just the way China went through this consumption upgradation wave, where once the sustenance, and all of us know the Maslow's hierarchy, once your basic sustenance needs are met, every additional dollar, a larger proportion of that goes towards discretionary spending. And so our view is that over the next 10 years, we will see that large middle class of India that will start spending on these things. And we can already see it, by the way. If you just look at the results of the publicly listed tech companies today, MTUs, monthly transacting users, may not have grown as rapidly, but the share of wallet that they are able to take from each of these households is actually going up. And that is also driving growth, right? So it's already happening. And like I said, we expect that trend will only accelerate in the next 5 to 10 years.
Shradha, I'll add one more nuance to this, and that's more startup-led, not just India. The number of companies that are targeting global markets is actually going up significantly. And it's not just in SaaS. SaaS was always more global oriented, but brands have started going global. B2B commerce portfolio companies, B2B commerce companies in our portfolio, some of them are half the business is actually global now. So this make in India for the world across software, financial services, B2B commerce, brands, all of this is going to play out in the next 5 to 10 years. So founders are not just thinking about India as the only market these days.
Rajat, tell me about fintech.
Yeah, fintech now is the evergreen sector. Right? No, the number of banks that exist in India. Like so many of them, right? And by definition, risk businesses can't have 100% market share or winner take all, right? So still, if you look at penetration of lending, insurance, wealth, all of this is minuscule or still tiny. In fact, we were doing a thesis discussion recently that what we used to invest 5 years ago is still relevant in financial services because you can cut the market in so many different ways. And each sliver is actually pretty large because of India's sheer size and scale. So businesses running it. There may be points in time where maybe UPI mein kuch nahi banega or whatever, phone pay type kuch nahi banega. But other sectors, lending, wealth, insurance, how many venture-backed insurance companies are there, for example? Right? Maybe two. Why can't they?
Shradha, I'll just ask, maybe I'll add to this, Rajat. And, Shradha, this is, sometimes while, we always go through these cycles in venture where people say, I can't see anything in this sector. And our view is 3 years later, suddenly 5 more things are come out from there. So I would just say that if you take BSE 500 or Nifty 50, right, which are the 2 largest sectors? Fintech. Number one, financial services, not fintech, financial services. Number 2 is IT services. Okay. Abhi wo financial services, the reality, if I go back to my earlier point on digitizing existing GDP, that trend we are in the very early days of. And while none of us can pinpoint the specific thing that will work, but around, whether it comes to credit, whether it comes to more sort of, first to bank customers, whether it comes to insurance, lending, there will be dozens of these plays that will get built out over the next year. And so I think we just, scratched the tip of the iceberg so far.
I want to ask both of you, Katina, VCs have herd mentality. Of course, you would have heard about this herd mentality that you guys present. So I'm putting you on spot and saying, what are some of the unconventional bets that you've taken as metrics that you'd like to talk to us about?
Yes, we have herd mentality. It's easier to operate in crowds. But anyway, jokes apart, I think the reality, and somebody had told me this very early in my investor journey, that you make money when you're contrarian and right. So by definition, if you're contrarian and if everybody knows about something and is doing it, there's likely not much money to be made there, right? I think many are. I mean, I think we were first investors in. If you take, there was a time I remember when and Rajat's investment, when we invested in Razorpay, the market was crowded. There were a dozen sort of online payment gateways. People were like, "Boss, this space is already taken. What's the differentiation in this? It's a commodity. Blah blah blah." What 7-8 years later, Razorpay does 100 billion plus of payment processing annually. And so I think if I take that, if you take, at the time when we did Ola, by the way, and I know it looks very obvious in hindsight, but I remember at the time we invested in Ola, every single person came and asked me, like, what were you thinking, right? Cab drivers are never going to adopt, mobile phones. What do you think a customer is going to open an app and wait for a cab to show up? Driver is going to, use this and all that. I mean, it was hard to foresee. By the way, when we invested in Ola, it was operated through a call center. We had seen the app, obviously, because we knew that that is getting launched, but largely it was all call center driven, right? And at that time, Uber was a tiny company in Silicon Valley that very few people had heard of. We heard about it when we did our diligence. It's not that Ola was a copy of Uber, so chalo Ola mein invest karo, right? It wasn't that. They kind of got built out with maybe a year or two kind of lag between them. Today, if you see, Rajat spoke about Ola Electric. I think it's a massive contra bet. Traditionally, auto has been a very tough segment for startups to crack. It's capex heavy. It's manufacturing. It's not about building software that you can do production push every night and fix your mistakes. You have to really sort of build this right from the get go. You need a very different kind of quality of org and talent that you need to attract to build that out. To your earlier question, a lot of people thought it wasn't necessarily a VC investable space, but we've done that. Which are the others, Rajat? I'm sure there's several others.
NBFCs as well, Shradha, to the fintech point. Look, there was a time everybody was saying fintech, but the largest companies that have got created are actually NBFCs. Right? 5-star in our portfolio went public last year. Oxizo, again, another NBFC. So to Tarun's point, actually, if you look at most large companies, kuch na kuch aisa hoga that we would have been able to get in early because either we had unique access to the founders or we had a thesis in that space, which has allowed us to play that game.
Yeah. When you were talking about Ola and Ola Electric, I was just thinking about Bhavish, because somewhere one cannot talk about that. Bhavish also takes those crazy, he is also, he makes those aggressive, crazy bets happen. And that brings me to the question that, you placed uniquely to get a very complete view of founders and entrepreneurs. And most of the VCs, when you talk, when we talk to them, they say, oh, good founders. Now, good founders and smart founders is very, hota hai sab good hote hain. I want to understand from both of you, what are some of the non-obvious signals, things that you notice about founders that you'd like to share with us?
Well, thoda beauty lies in the eyes of the beholder, but maybe I will take a crack at it. So I'll tell you what I personally like, and all of us have our own kind of things that we look for. I like founders who are daring. I like founders who are sort of, I will scorch the earth and I will change the world. It inspires me. I like to back those people. Sometimes they also get it wrong, and we get it wrong, and you can back somebody who ends up being more reckless than you thought. But a lot of those founders also create a lot of value, right? When it works. Second is, we like founders who are resourceful. Founders by definition need to be resourceful and not sort of corporate. And so we like founders who figure out the end goal and then work backwards from that to generate resources to get to that end goal. They're not saying, oh, here is where I am today, and because of what I have, here is what I can do, right? They actually just completely disregard all constraints and just operate from that sort of vantage point. I think third is we like founders who are good leaders. I think no startup in this country, or very few startups actually, are able to sustain for very long unless they have a strong leadership from the top. And while it's a journey, and no founder is born being a great leader, but the best founders eventually understand that, you need to get your organization skills right. And so I think it's that. And I think the last one is every company that is successful eventually is built on a core consumer insight, right? And so we like founders who have a nuanced, differentiated point of view about the market that they're serving, about the problem that they're solving, because very often it's just that. It's like a very simple core insight. And, sometimes when you dumb it down, it looks so silly, but that's what insights are. Like when you say them, like, oh my God, why didn't, or why didn't I think of this earlier? And so we like founders who are very, very sort of nuanced about their understanding of the problem.
No, so it's pretty much the same. And actually, Shradha, when you meet people again and again, and it's a classic thing, right, that you're investing in lines and not dots. It's some of these things that you can actually just feel it. Like this person will do something in life. So a lot of it is also gut, and you test them on some of those parameters that Tarun said. But ultimately, gut decision is that. I will also add one, different take on twist to this. Actually in this market, founders are choosing VCs as much as VCs are choosing founders. Great founders always have options, and it's becoming more and more so because a lot of these good people have emerged who've been done that. So I think the game has changed.
Which have been some of the most bitter to accept anti-portfolio?
Yeah. Too many to name.
And in hindsight, what are some of the
actually, पांच VCs हैं, सब लोग अच्छा काम कर रहे हैं, तो by definition होंगे ना काफी सारे हो, तो any company which has become large, we should have been in it. It's not that we didn't have access. So बहुत सारे.
And any takeaway that you had from
my biggest takeaway is, most of those mistakes that happened were process issues at our end, where because we had the access to do, or we had met most of those companies, and either we didn't think about them in the right way, we didn't do our work, sometimes we were late. So it was all process issues which we need to do a better job.
I'm so happy to hear even VCs calling out process issues, because as an entrepreneur, I think process issues are so rampant. So, okay. Now rapid fire for both of you. And I have to get this right. An upcoming sector in which startups will generate the most revenue in the next 3 to 5 years.
I'll say gaming.
Both have to answer. I would say B2B commerce.
Say fast, Rajat. You can't.
B2B commerce.
Okay, fine. A global or Indian VC that you respect, and why, other than you guys yourselves?
I will say Fred Wilson, Union Square Ventures.
I would say Paul Graham globally. I really love reading all the thoughts he puts out. I'm also thinking about Indian names. There's many like all up. I mean, a lot of our peers we respect a lot. I think we have the privilege to actually sit with several of these people on different boards, and we actually learn from them all the time. So there's too many to name.
Okay, good. Sorry.
Not being politically correct. But yeah.
No.
There's too many to name.
Comes across. No. Okay. I'm laughing because I wanted to say that, you guys are reminding me of film stars. You say, no, which actor do you like more than yourself? There's so many. But I know that it's coming from a very sincere place. So next, a portfolio founder that you connect and resonate deeply with. Now, don't say all of them.
Yeah.
No, so here I'll tell you, I was fortunate that, Bhavish and Ola was my first investment. I think in 2012, it's actually 11 years later, I still connect and get most inspired by him. And for two reasons. One is limitless ambition. And I think that's the only way to put it. I think he's just getting started after creating, sort of two very large companies.
And yes.
Yeah. So I think limitless ambition, but I think second, and this is what most people don't know about him, is I think there's a very, very strong pride of India angle, which has, I think, developed. I don't know if it was there earlier, at least I didn't read it, but in the last 3 or 4 years, I think the pride of India and saying, India will be known for global best-in-class, highest quality products. And, made in India should be, seen and, with pride and I want to put India on the global map. I think that's become a very big part of him, which to me is very, very inspiring.
Yeah, no, that's Bhavish. Yeah.
For me, look, the easy answer is Harshil and Shashank of Razorpay. I'll not go there. It's just front and center. But among the younger ones, for me, I really like Dipanshu of Toddle. He's just so calm, composed. He knows what he wants to do. Doesn't get bothered by what's happening. I can just learn just that much from him, right? Don't live in FOMO at all. It's just a pleasure to, work with him.
Yeah, but very important skill, no? Because most entrepreneurs do get stressed.
Yeah, almost like monk-like at times.
Why should the best founders come to Matrix when they have strong alternatives in the Indian market?
Talk to our founders. Please go talk to our founders. They will tell you what's the best.
Okay. Yeah. No, I think that's the best answer because.
So by the way, yeah, that is by the way the best answer. That's genuinely what we say, Shradha. We find ourselves Rajat made this point earlier that there was a time where investors, could have the luxury of picking which founders we want to invest in. It's actually the other way around today. The best founders have enough investors chasing them.
Yeah.
And whenever we find ourselves in a competitive situation, we actually just say one line: we will not sell ourselves. Just please do one thing. Pick up the phone and speak to any 5 founders. Don't ask me which founders. Go to my website. All my portfolio is public. Pick up the phone and speak to the ones that work. Pick up the phone and speak to ones that didn't work. 8 out of 10 times, the founders come back and say, we want to work with you. Okay. And to us, that is, while we all wanted to be 10 on 10, I think we're happy with where it is right. I think the second thing is I actually tell founders, don't work only with Matrix. If you have a choice, don't work only with Matrix, right? If I'm a founder, and let me keep the Matrix hat aside for a moment, right? If I had to raise capital today and I had like multiple investors chasing me, what's in my interest? My interest is not to just take money from one investor. I actually want to take money from at least 2 investors. Hopefully not, too many, because then there's really no skin in the game and it's a party round or whatever. But I would likely pick 2 of the best investors that I have enjoyed my conversations with, who sort of see things the way I'm seeing them, who will be long-term supportive. Because if things are going well, both of them are hungry to buy more ownership in my company, and I don't need to go outside and raise an external round and go and pitch to 50 other investors. If things are not going well and I need more time, I have 2 pockets to dip into to say, boss, I need a little bit more time, support me through this. So selfishly, as a founder, it's a no-brainer, and very often we tell founders that, saying, boss, we know that you are talking to multiple investors. If you are okay, doing this with somebody else, we are more than happy to support it, as long as it's another investor who sees things the same way that we're seeing them.
So Tarun, can I just ask one question here? Like in the last 1 year, 2 years, maybe last 1 or 2, 3 years, because of course we had pandemic also, were you in a place where there were portfolio companies in crisis and you had to give money, right? Like
yes, absolutely.
Because we hear in the market that jab gaye to, your investors don't back you because they're always saying, go get it from outside.
And by the way, that should be the rule, because it's very easy in this business to drink your Kool-Aid, right? Mm-hmm. And so you don't want to be, see, we are running a business over here. Our responsibility is towards our shareholders to generate IRR.
Yeah.
It's not about, whether I'm supporting somebody, not supporting somebody, and money is not the only way to support someone, right? Through a difficult time. So our simple thing is, if the business is working and the company needs more time, our view is there's always money available from us, from other people also. But if a business is not working, the bigger question that we tell the founder is, listen, let's say we put money, you'll buy more time. 6 months later, 12 months later, you're going to be in the same situation. But you've lost 12 months of your life. Nothing changed for me. Sure, I put X, maybe I put X plus a little bit and give you more time. But the larger question to ask is, are you comfortable putting another 2, 3, 4 years of your life behind something that is not working?
Yeah.
And often again, we see the founders who are mature will come back and say, you know what, you're right, let's call a spade a spade. It's not working. And I don't think 12 months is going to change anything.
Okay.
And so I think we have supported and we will continue to do that. But there are cases where the founders themselves actually reach the answer, saying, you know what, more time will not solve anything here.
Yeah.
And I think that's the mature call to take.
Yeah. We don't know when to say no and when to.
Yeah, it's a hard call.
So to both of you, what business would you pick if you were to be a founder today?
Oh, that's a hard one. Every 2 years that answer changes for me.
when I joined Matrix, there was this lingering thought that I will also start my own business at some point in time. But now this is the only business I can go. If I'm not in Matrix, I'll probably be investing in some shape or form.
Actually, Shradha, a lot of people forget this is, running an investment firm is also business, right? Like, while I know it's an investor, we are
Raising
running a
funds.
business. Yeah, we have to do the same things. We have to go to investors, raise capital, generate returns. Every 3 years, we are back in the market to prove that why we, deserve to raise the next fund to support the next set of companies. So it is a business, and I think to Rajat's point, we are very happy running the business we are running today. And I wouldn't change it today. I mean, I've been on the entrepreneurial side earlier. I wouldn't change it because I just think the number and the quality of kind of entrepreneurs that we've got to work with in the last few years, I just think it's unmatched because you get to learn so much from so many different people.
Yeah. Actually, you guys are in enviable role. India in 2030, what would it look like? Non-political answer.
Talking, you judge by this conversation, we are India maximalist to the extreme. I'm like very long. I think well on the path to matching up to China.
With China?
Yeah. Well on the path. Not there, but well on the path.
Okay.
Yeah. I think, Shradha, to my earlier point, it will disappoint both the optimist and the pessimist. So the real answer will be somewhere in the middle, is my view, and which is why you need to be thoughtful about sort of as you kind of size your bets. As India, we've always suffered from too much capital getting into too few companies and too little liquidity. Right? That's been the bane of the Indian startup ecosystem so far. I think enough investors have now learned their lessons. Founders have learned lessons. All of us as an ecosystem have evolved. But I can tell you for sure, from sitting where we are today, these things also compound with time, right? The first 7-8 years, we were just building blocks and all of us were making rookie mistakes, both founders and investors. I think things started changing 5-7 years ago, maybe with Geo, with Aadhaar, with a bunch of these things, where I think now we can see the compounding. Companies are growing faster off a larger base and are more capital efficient than their like version ones. So if I take like a bunch of companies in our portfolio, right? If I take, say, fintech as a sector, if I invested in 3 fintech companies from my fund 2 versus similar fintech companies in similar domains in fund 3, the fund 3 companies are growing faster and are taking less capital to grow and are more profitable. And so I think 2030, if you just again just compound that, I think we will continue to see value creation compounding, and it will happen faster than a lot of people think today. But you have to be thoughtful. You can't just be a default bull in everything, right? One has to kind of size those bets and be thoughtful about it.
But Tarun, you're going on record to say that companies today are capital efficient. I'm picking that.
They are more capital efficient than we have seen earlier, and yes, we are seeing. And by the way, this is not just our view. Like, we speak to a lot of global investors that engage with our companies. Some of the largest global investors say that their India portfolios are actually doing better than most of the markets.
Interesting.
And that's the reason why so much capital is coming to the country.
How would you, and Rajat, this is, you have to describe Tarun to someone who doesn't know him. And Tarun, you'll have to do that for Rajat.
Yeah, Tarun is the friend you need when you want to talk about anything. All the good and the bad. He is the highest EQ person that you could hope to meet.
Okay. Again, I'm listening. Shradha, you should ask him this question when I'm not in the room. You will get a different answer. No, what is Rajat? I just think team player. That's the one word I think of. He'll always put firm before himself. He'll always put his colleagues before him. And he will always do right by the founders that he works with.
Wow. I'm just feeling this is such a Karan Johar and Suraj Barjatia moment. This is such a happy moment.
Again, see, if you after a few drinks, the answer will become a bit more colored. But for now, for this conversation, this is good.
But you guys are in the business of money, and I want to ask, and I want to end on that. Okay, this is my second last question. What does money mean to you individually? You deal with money, you raise capital, you work with founders. What has money meant to you in your life journey so far?
Good question and tough one to answer always. I think everyone's relationship with money is a little bit complex, and most
Yes.
people actually haven't even spent time to think about what is their relationship with money. I will take a stab at it. Actually, I've asked myself this question multiple times that let's say I had 100 million or a billion or whatever, take any large number, what would I do with it? And actually, I don't think my lifestyle would change much beyond the point, and maybe that holds true for most people. But I do think that it gives you, for me personally, it would give me sort of both the confidence as well as the resources to take more ambitious bets personally and as an investor. And I think secondly, at some stage, I think we all reach a stage in life where there is a question around what's the larger purpose about everything that you're doing. And so hopefully you can create more impact with that. And those thoughts are still very early in my head because I'm very far away from reaching any of those numbers that we discussed. So yeah, that will hopefully get more clear over time.
Rajat.
To me, it is an outcome. It's very early in my life, I was taught by one of my teachers that marks ke piche bhagoge to kuch nahi hoga. It's like classic three days
Yeah.
excellence ke piche bhago.
That's like a very middle class upbringing, yes.
And to me, that just stayed with me forever, right? And hence, it's an outcome for me versus anything else, right? So hopefully, we'll all do well in life. And we don't have to think harder about it.
Matrix Partners India. A big moment, big. And again, congratulations. And again, this is so important for India, for Indian startup ecosystem, for everyone. And you guys are making it happen. Tell me before you go, to everyone who's listening and who's watching us, what would you say and what would you tell entrepreneurs? Because abhi hum itni sari cheezein sun rahe hain. What would be your, not message, but what's something that you'd like to share with everyone who's a participant, enabler, builder of the Indian startup story?
I can maybe add a few things from my side. I think a few things where we are today. And I know that we are probably, Shradha, you started the interview saying, this is probably the time where there's the highest amount of, I guess, skepticism in the market, right? In terms of startups and funding and valuations and all that. I do think, and we've spoken about this earlier, which is creative destruction, right? It's the nature of the beast. There will always be things that don't work. But when you zoom out and you look at this over a decade, you will actually see real valuable sort of large companies that will come out of it. And I think sometimes we tend to focus too much in a very narrow window of, hey, but valuations are down. Oh, this listed company, they put down 60% from peak, 70% from peak. It's irrelevant, right? I was reading this report which said if you take a 30-year view of a company, the 5% of the total value of that company was built in the first decade, 5 to 7%. In the second decade, that's another 15 to 20%. 70% of the value of a company is built in the decade number 3.
Wow.
Now, it's not that along the way, it's a straight line. There's a lot of ups and downs along that, right?
Yeah.
I think sometimes we all tend to focus too much on those because I think human brain is not capable of taking very long-term sort of perspective on things because we're just operating with a lot of recency bias. It's just inbuilt into all of us. And second is, I think, compounding. Everyone says compounding is the eighth wonder of the world, and most people aren't able to intuitively understand compounding and how compounding can actually change things over long periods of time. And so I will just say, I think this is the time for people to really heads down, hunker down, build, take the right lessons from the last 3-4 years where there was a slug of capital and there was overfunding and growth at all costs mindset and all that. I think we have to take the right lessons, but this is the best time to go out there, build. There's a lot of us and our peers have raised capital. We're here to deploy. We want to find the right entrepreneurs, back them for the next decade of company building.
But it's very similar that when the Japanese look at businesses, they will one of my friends' companies they were talking to acquire. They asked them for a 100-year business plan. So it's somewhat similar. Look, India mein time lagega, right? But patience and staying true to what you want to do is the need of the hour here. We all, it's very clear that the value creation is coming. We have to stay the course.
Talking to both of you, I have to say this, that like, what should I say, very, very genuinely, बहुत मजा आया that and I'm going to remember the pessimist and optimist view of India, but I thought this was a very realistically optimist and encouraging conversation, and there's so many things to pick up. Thank you so much to both of you, and we wish Matrix Partners goes on. I'm taking the number to invest in 45-50 new companies, and we see phenomenal growth of the Indian startup story. And yeah, I'm very proud to have people and investors like you. With that, thank you so much.